Have you realized that everything has become much more expensive?
Across the board, Americans are paying more for everything, including housing, groceries, and gas.
Before the pandemic, if you would make, let's say, $100,000, people would say, that's a lot of money.
More than half of Americans with an income of $100,000 a year or higher say they're living paycheck to paycheck.
But today, $100,000 isn't really that much. In 2022 alone, we had an 8% inflation. Do you know what that means? Let's say you saved $100,000, which was a lot of money. By the end of the year, the real value, the purchasing power of your $100,000 would be just $92,000. So imagine what happens to your savings if we had like an 8% inflation, then a 4% inflation rate. But guess what? You still have to pay taxes on your $100,000. That's why people are wondering, what should they do with their money? Where should they keep their wealth in order to keep it rising at least as much as inflation? So here in this video, I want to share with you 7 assets that are always better than cash. They don't really rise as fast as crypto, for example, but they're really safe investments. And at the same time, they're very liquid, which means that you can easily turn them into cash whenever you want. More than 90% of all traders in the stock market lose money. And that's why a lot of people confuse investing in the stock market with gambling, because they look at all of these charts and they don't understand why they're going up and down. And guess what? Nobody in this world exactly knows how a particular stock is going to behave. Even Warren Buffett, who is the world's greatest investor of all time. I mean, the only person who knows that is Nancy Pelosi and everyone else who works in the White House and the Congress. But if you don't have the privilege of working in the Congress or the White House, there is actually a way to invest in the stock market safely. Back in the 20th century, there was an investor called John Bogle. He understood that it's not easy to actually analyze stocks, find out where the great stocks are. It's really easy to pick the wrong stock and lose all of your money in the stock market. So he understood that investing in the stock market isn't always for everybody, especially for the people who aren't ready to put in the work and learn how the market works. However, he realized that no matter what happens, no matter how big is the crisis, there is one organization that always thrives, no matter how bad the crisis is. And that organization is the US economy. I mean, at the end of the day, US economy is just one giant organization that contains within itself multiple companies. So instead of picking up stocks individually, he decided that he's going to create a fund that is going to invest in the top 500 largest US economies. These top 500 companies represent literally the entire US economy. They are tech companies, pharmaceutical companies, gaming industry, and whatever you can think of. The most powerful companies in every single industry. And if you take a look historically, the S&P 500 averaged an annual return of 10% over the last 100 years. That's why if you're investing in the S&P 500, you can be confident that as long as the US economy is growing, the S&P 500 will keep growing. I mean, if there is anything that you don't want to bet against, and that is the US economy. It's literally the most powerful economy in human history. So when you're investing in the S&P 500, yes, you aren't really making astronomical returns of 100%, but at least you're averaging 10%. So even when inflation was 8% in 2022, you're still doing better than inflation. And in some cases, like in 2022 or 2023, it averaged probably around 20%. And in 2021, when the stock market was booming, it was around 25%. And that is why when you're investing in the S&P 500, when you're keeping your capital in the S&P 500, you can be confident that inflation isn't gonna eat up your money. Your money will keep growing at least faster than inflation. But the problem with investing in the S&P 500 is that you don't really get cash on hands. I mean, the value of your wealth is growing in the numbers, in the charts. You don't really realize those gains unless you sell your investments. So if you want an asset that will constantly put cash on the table, then you have to go with dividend stocks. When a company turns on a profit, there are 2 things every single company can do with that money. Either it's going to take that money and reinvest it back into the business by hiring more people, developing new products, or it could be generous and distribute that profit to its investors. Now, the businesses that actually distribute the profit to the investors are huge, stable businesses that already have a proven business model. such as Coca-Cola. It has been around for over 100 years. They sell pretty much the exact same product that they always have been selling. The only way for them to reinvest that money back into the company is when they enter a new market. And how often do you think Coca-Cola actually comes up with a new product? It's literally once in a decade probably. However, now compare Coca-Cola to a tech startup that isn't really have a proven business model. Yes, this tech startup might have many sources of income, but we don't know for a fact if they're gonna survive tomorrow or not. When Facebook came out, it was a new industry, it was a new technology. So they didn't really wanted somebody to come in and get their market share. That's why they spent $1 billion buying Instagram. I mean, imagine what would have happened if Facebook didn't buy Instagram back then. They would be their biggest competitor today. Or they spent $19 billion buying WhatsApp. And that is why if you take a look at tech companies, they don't really often pay dividends. They don't really redistribute the profits that they make compared to traditional businesses such as automotive industries like General Motors or Ford. But wait a second, how do you know which companies do pay dividends? Gladly, there are a list of companies that are known as the king of dividends. These companies have been paying dividends for literally over 50 years. I mean, the only way for you to be in this list, you need to be paying dividends. You need to increase your dividend for at least 50 years. So you can be confident that not a single company out of this list want to stop paying dividends, because they will have to do that again for at least 50 years in order for them to go back to this list. And that's why during every single crisis, from the 2008 housing crashes literally destroyed the global economy, or the 2022 pandemic, these companies kept raising their dividends. And that's why if you want to invest in dividend companies that you know that for a fact that they will pay you a dividend, and you know that these are not just small companies that are trying to pay you dividends in order to attract your investment, but rather they're stable companies. They won't go bankrupt tomorrow. Yes, their stock is volatile like any other stock, but at least they have proven business models that you know for a fact that they will keep paying you dividends, and their stock price will at least gradually keep growing. The only problem with this company is that because they are huge and because they have been around for literally decades and sometimes for over 100 years, they don't really pay much. I mean, the dividends that you can count in is probably like 2 or 3%, maybe 4% at best, but that's the best case scenario. And the stock price doesn't really rise much. However, for those who want to buy assets that grow way faster than dividends, then you have to go into franchising. Now, franchising isn't really as passive as other assets that we have on this list, because it will essentially turn you into an entrepreneur. However, unlike starting your own business where you have to do everything from scratch, from finding the idea to finding the right location for your business, franchising literally gives you almost everything. The only thing that you need is probably the capital in order to open that franchise. They will tell you everything that you need to know about the business, because they've probably done it hundreds of times, maybe 1,000 times. So there is nothing revolutionary about it. The downside is that you don't have really much creativity when it comes to that business. You cannot come up with anything new. You have to follow strictly the rules. And the biggest problem is that you have to share with them a portion of your profit. On the other side, you don't really have to come up with anything. If you automate everything, if you get the right location, if you hire the right people, then you can just watch how your money keeps growing. You can just watch how your capital is actually generating income over time. But if you don't want to go through the hassle of opening a franchise, because besides just investing your money, you still have to invest a lot of your time. So there is another option. There is a better option. And that option is gold. You see, for most of history, gold has always been used as a currency. It has been one of the most valuable assets out there until Nixon abandoned the gold standard in 1971 and essentially turned gold into a commodity. But unlike the paper money, unlike the US dollar, gold has been rising in value since then dramatically. In the last 10 years alone, the price of gold increased probably by around like 200%. And the biggest increase was during the pandemic, when the Fed just started injecting trillions of dollars into the economy. You see, when there are too many dollars in the economy, the value of dollars will drop, of course. But because gold is a rare metal, it's not easy just to print gold. You have to find it and dug it out of earth, which makes it extremely expensive. And that's why the price of gold kept increasing compared to the US dollar. And if you look at the last 20 years, then the price of gold quadrupled, especially when Ben Bernanke introduced massive quantitative easing in 2008 to save the global economy, including the US economy. You see, gold by itself is a useless asset. It doesn't really produce anything. It just sits there in the corner and shines, as Warren Buffett says. Of course, it's used in some of the computer chips, but if you compare like gold to other assets, such as real estate that constantly provides value, it provides shelter and a roof over your head, gold doesn't really do much. But whether gold produces something or not, it doesn't really matter, because compared to real estate, gold is much more liquid. It's way easier and faster to sell your gold than real estate. Of course, there is also silver that always goes hand in hand with gold, but prices of silver hasn't been really doing that great if you compare them to gold. Yes, there was a period where prices of silver shot to the roof, like in the 2000s, but people quickly realized that silver isn't really as rare as gold, and silver prices haven't really rose much in the last 10 or 15 years. Just take a look at gold prices back in 1971, before Nixon abandoned the gold standard. An ounce of gold used to cost less than $100. And guess what's the price today? It's literally over $2,000. But if you're not into gold and rare metals because you just believe that gold is a useless asset, then you can go with government bonds. And government bonds are probably like literally the real passive income out there. Even real estate is not really as passive as government bonds, because if you have ever owned a piece of real estate and rented it out to someone, you know what a hassle it is. It's not easy to manage it. I mean, it takes some time, it takes effort, it takes more and more investments. And if you have multiple properties, then it easily turns into a 9-to-5 job. And sometimes you need to hire a company in order to manage your properties. So if you don't want to go through the hassle of actually managing properties and dealing with renters, then the best thing would be is to actually put all of your money into government bonds, especially now. The main source of income for any government is taxes. That's why if you don't pay your taxes, you will go to prison. The government doesn't really care, because if you don't pay your taxes, you'll be an example to other people. And if a lot of people stop paying taxes, then the government will go bankrupt. That's why avoiding taxes is one of the worst crimes you can actually commit. However, politicians, for some reason, always tend to overspend. And that's why there is always a budget deficit. And guess where they will take that money from when they overspend, when there aren't enough money from taxpayers? Exactly, they will borrow that money. And when they borrow that money, they do it in the form of a government bond. It's an IOU, a document that says that whoever owns this piece of paper, the government owes it an X amount of money. So let's say it's a $1,000 government bond with a 5% yield. That means that the government will pay you a 5% interest on that government bond until that bond expires or matures, in other words, and the government will pay you the full amount that it owes you. If your friend owes you money, there is a chance that he can default on that loan. But when the government owes you money, then you can just sleep calmly and don't worry about it, because the government isn't going to default on its loan, especially the US government. That would literally hurt its credit score. That's why the easiest thing would be to do is that raise the taxes on people and pay that loan one way or another. So government bonds, especially the US government bonds, are probably the safest investments out there. And since interest rates right now are really high, I mean, the Fed's effective rates are probably over 5%. 10-year government bonds have like a 4.5% yield, and 3-month government bonds probably have around 5% yield or probably higher, which makes them a best investment that you can make, especially if you have a lot of money. I mean, if you're sitting on a ton of cash, instead of just keeping it in the bank, just buy government bonds. Of course, you can just keep it in a fixed deposit, but as we know from experience that smaller banks that actually provide high interest rates, they aren't really as safe as we thought. I mean, just take an example of the First Republic Bank or the SVB. The problem with most of the assets that we have talked about earlier is that they don't really get you much. I mean, you can get 5 or 10%, but the people who are sitting on $1,000 or $5,000 or even $10,000, I mean, making 5% on your $10,000 isn't really a lot of money. You need an investment that is gonna rise in value dramatically, like by 100% or 200%. I know that it sounds a bit unrealistic, but there are such safe assets that rise in value dramatically by literally 200 or 300%. Unlike gold that doesn't really produce anything, or real estate that literally fulfills a basic need, technology has the ability to make us more productive. I mean, it's like magic. A single line of code or a software can actually make the society way more productive. Take an example of Airbnb, Uber. I mean, Google is the best example. It's not something that you can touch, it's not something that you can feel, but it literally makes the process of browsing the internet way faster, way easier for not just millions of people, but for billions of people across the globe. And in the last 5 years, the price of the Google stock rose by around 160 or 170%. And Google is not a tech startup. It's not a company that was founded yesterday. It has been around for over 20 years. And even though it's literally one of the largest companies out there, it still grew by 160% in the last 5 years. Tech stocks are the only stocks in the stock market that has the ability to grow exponentially. There aren't any other stocks in any other industry that grows as fast as tech stocks. I mean, take a look at the largest companies in the stock market. What do you have at the top? You have Apple, you have Microsoft, you have Google and similar companies. These companies worth literally trillions of dollars. And over the last 20 years, when we went through multiple crises from the 2008 housing crash to 2022 pandemic, these tech companies kept growing, they kept innovating, they kept producing products and software that made the society much more productive, and today they're worth trillions of dollars. I mean, if Bill Gates didn't sell his Microsoft stake back in the 1990s and kept his shares, his real net worth today will be over $700 billion. He would be wealthier than Elon Musk and Jeff Bezos combined. So if you don't have a lot of money, if you're starting with a small capital and you want your money to keep growing way faster than any other asset out there, just go and invest in tech stocks. Even Warren Buffett understood that, and that's why in 2010 or 2014, something like that, he went in and invested billions of dollars into Apple. And guess what? Apple has been probably Warren Buffett's best investment in the last 30 years. And if you want to learn how to find tech stocks that will rise exponentially, if you want to learn how the stock market works, how these billionaires are making so much money in the stock market, then go to the Intelligent Investing Academy. That's where we teach you everything you need to know about the stock market and how to find stocks, how to make money in the stock market. That's why we launched that academy. The link will be in the description. But if you're not into stocks that rise in value dramatically, but you have to actually learn how to find the stocks, then you can go with something tangible, with something that you can touch and feel. And these are luxury watches such as Rolex. And according to this chart, Rolex has been doing pretty well. I mean, compared to cash, I guess every other asset out there did pretty good, especially during the pandemic when these companies artificially created a shortage of their products. The fact that these luxury brands are actually artificially trying to maintain prices is really good for buyers, but I'm not really sure how long they can do that. Of course, what happened in the last 10 years isn't something that you can actually rely on and assume that that's the exact same thing will happen in the future in the next 10 or 20, 30 years. It's better to buy assets that really hold real value within themselves, such as pieces of companies that grow dramatically, such as tech companies that keep innovating, keep building something that rises in value. But if you still don't want to hold cash and buy something that you can afford within $10,000 or $20,000, then luxury products such as watches is probably a good investment to go with. If you have enjoyed this video, give it a thumbs up. Thanks guys for watching, and I will see you in the next one.